back to the channel. We are going to get back to the TA, all right? We're going to keep it short and sweet. 10 minutes, we're going to do Bitcoin, we're going to do EGLD, we're going to look at some on-chain metrics, and that's pretty much it. All right, make sure you check the Twitter. We're going to have more content coming on there soon. I've been really busy the last week, so I haven't gotten to do much. Make sure you check out my talk with Wesley Kress on episode 3 of the podcast. I still have to put up the audio-only version on Substack. That'll be there soon. Make sure you check the link for all the description, or make sure you check the description for all the links. And let's get started. All right, let's do this. And thanks again to Wesley for doing that. That was really fun. All right, game on. Let's go on to our Bitcoin chart. So the first thing that we're going to look at on Bitcoin is the fact that we're still in this ascending triangle. Now, an ascending triangle is a bullish pattern. Basically, it tells us that you have a price ceiling. That ceiling right now for us is somewhere around the 45,700 mark. We have topped out there twice, and it looks like we are heading in the same pattern. Now, this pattern would indicate that if we continue to stay within it, we are looking to break out at somewhere around 70% of the apex. That would be between April the 20th and May the 4th, based on how this is right now. So if this is going to play out, expect the price of Bitcoin to do something like this, to work its way back up to around 45,000 and then come back down to around 42,000 and then work its way back up to around 45 again and then come back until it breaks out. Now, this is in a 100% match to the scenario we're looking at. Obviously, I've predicted the breakout a little bit earlier here, and the reason for that is simply that's right at 70% of the apex. And pretty much it gives us two targets. So what the patterns that we're looking at are giving us targets here at 52K for confirmation. We essentially have to break out past this prior top right there in order for the bullish confirmation. Once we break that, we are going back into a bullish phase. That would also put us somewhere around here, most likely, if the breakout is right there, which is going to have us right at the top of this regression channel, right? So basically, if you just ignore the triangle, we're coming up to this regression channel, and this is going to be where we confirm that we're bullish. And then at that point, if we break this, we are looking to go up to around 63K, and somewhere around here, this 63 to 65 mark at our all-time high is when I'm going to expect another consolidation. And the hope is that the consolidation, like this one and this one, becomes lower, and maybe we consolidate to 50K the next time. Right? So we keep putting in lower highs and making these longer term bullish patterns. So that's kind of what I'm looking at. And that's why I haven't done too much TA on Bitcoin yet, because it's been following this pattern. And I told you guys this on Twitter, until it breaks out of this pattern, whether up or down, we don't really have a whole lot to look at on the Bitcoin chart. Our VPVR is looking great. We are putting in tons of volume in this area. This is really, really good. If you zoom out to a longer period of time, you can really see the level of support that we've built up around this $38,000 to $40,000 mark. This is massive support. And the longer we trade in this range, you'll see is actually a good thing. We're filling in these support areas. So this is actually super, super good. And just imagine, as we're up above 60K at some point in the future, it's going to be unlikely that we drop below the 50 level because there's so much volume being putting in there. So this is really good for the long-term holders. For short term, it's obviously going to push some people out, people who aren't really in it for the long term. They're just trying to make short gains, and that's fine. Those are the people that sell and then they regret it later. It's just how it works in everything. So the next thing that we look at is if we move to the downside. If we drop below, I wouldn't consider us bearish until we lose this. Now, this right now is at around 33,000. So if we lose 33K and we set in a lower low on the entire pattern, well, that tells me that we are still moving in that direction, right? And then at that point, you have this trend line being where your bottom could be. So we could see ourselves come down to the 25K mark. Now, that's only if we drop below 33. If we drop below 33K, then I'm looking at this key support level of 31,000. And this key support, basically, if you zoom out, these are where we had the wicks in that prior drop in May through July of 2021. So that is our key support. We do not want to lose this. If we lose this, then definitely 25K is a possibility, but 25K actually becomes possible as soon as we lose 33K. So these are really macro numbers, and I'm looking at everything, well, macro for like a few months, you know what I mean? So technically they're still short term, but Yeah, that's what I'm looking at. That's the entire thing with Bitcoin. You'll keep seeing my updates. If I see anything new, I'll let you know. But as of right now, I'm not seeing anything major, except if I look on shorter time frames, I'm seeing a few things, but none of them have played out that I've been watching. So I haven't bored you with those. We also see one other thing that's pretty important. Keep in mind, this is the daily chart. We see that we are moving well above the 45 level. So if we do retrace and come back and bounce off of it, that could look like this. That could look like us coming down and bouncing off the bottom of this triangle and working our way back up to that area where we would break out. So keep an eye on it. I mean, everything is kind of looking very structured in this triangle so far. So that's what we're looking at. All right, we're at 5 minutes. Let's see on chain for Bitcoin what we got. So these here are our exchange reserves. We have all kinds of stuff here. We have our exchange reserves. We have our miner reserves. So basically in red, you have your exchange reserves. Then in blue, you have your Bitcoin price. And orange, what happened to the text, dude? I lost the text. I'm supposed to have text here, but it disappeared. So miner reserves, the amount of Bitcoin that are being held by miners, Bitcoin price, obviously the Bitcoin price, and in red, it's the exchange reserves. And we see the Bitcoin price has a very long-term symmetrical triangle that it's putting in. Assuming this is the case, then I would guess that the price would go like this, right? Until we break out of this. Now, this is kind of we have that ascending triangle happening within this in this range, like in a very short time frame. So we could just be seeing the breakout to take us up to here to 53 and then come back down to 34. And that's technically within this symmetrical triangle. So it's very interesting. We see a lot of things when we zoom out to different time frames. So anyways, what we're seeing here is the same as before. We're seeing exchange reserves dropping. We're seeing miner reserves trending up, and we're seeing the Bitcoin price consolidating. This tells me at a certain point in time, the price is going to catch up. Now let's take a couple of other reasons why, right? First thing I want you to look at is the Bitcoin difficulty. Okay, let's save this. Let's go to the difficulty. So if you look at the difficulty, you can see the difficulty of Bitcoin has been rising. It's actually near all-time highs. This means that it takes a lot of mining processing power in order to process blocks and receive rewards. Now, if you look at the Powell multiple, the Powell multiple is telling you how much miners are making. This is the miner profitability rate. The miner profitability rate is actually quite low. It's been quite low for a while, and that makes sense. Obviously, when the price is low, the miners are less profitable, right? Because the Bitcoin they're mining is worth less. So essentially, this tells us that we are not looking to see miners selling a lot. So a lot of sell pressure is diminished, and you saw that in the previous screen as well. You seeing the amount that miners are accumulating. And then we look at the hash rate and we see that the network is still as strong as ever. We are still at very, very high levels of hash rate. And if we then look at the NVT ratio, which is the network value to transactions ratio, this is kind of valuing the Bitcoin network. We are still at levels so low here that Bitcoin is tremendously undervalued. And I think that we're basically at a point now where we're just waiting for that trigger to just cause Bitcoin to bounce and go up further than I think we're used to seeing. But that could be a while. We could keep consolidating. That ascending triangle that we looked at, it could break out to like 45, 47K, and then it could go back down and consolidate more, and then we're just filling in this much longer term consolidation pattern. We'll come back and look at these things, and I will make some edits to my screen here because you don't need to see this stuff at the top. I can give you more chart real estate, so I'll fix those things for next time. Okay, let's move back on to our, we'll go to EGLD now, and we're going to switch to the normal TradingView. Now, basically, what we're looking at on the EGLD chart is some pretty serious activity of late, and this is the daily chart, and the most important thing that I'm seeing right now on the daily chart is that we have moved into a point where we are now getting ready to start having golden crosses. And golden crosses on the daily are a pretty big deal. Now, the price is at an interesting point because it has come up and it has touched this red 200 exponential moving average. Once it hits that 200 exponential moving average, you're going to expect a retracement. It tested it at 192 yesterday, and now the price has dropped back down. If we then turn on our TD sequential, you can see that our TD sequential on the daily is actually telling us a different story. It's telling us that even if we're hitting this, we're only throwing a green 4 right now. A green 4 is actually an indication that we can keep moving. Remember, until you hit a green 9, you are not really looking bearish. So we need to go to a lower time frame to see what we're seeing there. On this lower time frame, okay, this is what you see. You see here that EGLD came up. Now, this is a 4-hour chart, all right? So keep in mind the golden pocket is this light blue area. That's the golden pocket is where you see a lot of trend reversals. So we really are curious what's going to happen there. Well, the first thing that's interesting is that we almost hit the golden pocket. We were basically right at that 90. We were at 192, 193. The golden pocket starts at 194.12, roughly there. Now, what's interesting is that we had a green 9 here, which is bearish, right? It tells us we're overextended. And then we saw that we actually dropped down, we went up, and we went sideways a bit. This is on the 4 hours. This is all happening yesterday and today. And then the TD sequential on the 4-hour reset. Now, the cool thing about that is, well, the TD sequential reset, but look what happened to the RSI. RSI went from around 80, from about 76, and it's dropped back down to around 60. Well, you've heard me say this before, when the RSI is between like 55 and 65, that is a great area to keep in that bullish momentum. That's like the bullish momentum area. So as long as we remain in that 55 to 65 area, there's no reason for us to not have another move and break into the golden pocket. And what I really want to see when we do that is I want to see a lot of trading here. I want to see a ton of trading between 194 and 210. And that ton of trading, it can all happen within a month, because keep in mind, if we're predicting that we may see Bitcoin breakout by, that end of April, early May timeframe, well, that's about another month from now. So if in that month, EGLD puts in a ton of volume between 195 and 210, then we might be doing something like, like this. Let's just take a view of what that might look like. We will zoom out here, and we're just going to draw it in. So let's say that happens. Let's say our breakout, we'll do a horizontal line, a vertical line, and we'll say that vertical line is going to give us our possible breakout area. Okay, our possible breakout area may be like somewhere around here in May. So we'll just come here and say that, okay, let's say we break out around May the 3rd. I think that was roughly around where we had predicted. So look at how much time that gives us if we look at the 4-hour time frame. Well, technically, we could drop a little bit here. We could go sideways and come up and test this, come back down, go sideways, go up. But what I really want to see is us just putting in volume. That's it. I don't care if we're up or down or whatever. As long as we're putting in all this volume in the golden pocket, well, then what happens is you zoom out, and that's when you'll notice that you have this area on the right-hand side, the volume profile. Okay, this is telling us the amount of volume. What you can see is down here at the 140, 150 range, we have a ton of volume. We don't have a ton of volume at the golden pocket. Right? That's the golden pocket. And you'll see that the golden pocket area is much lower in volume than what's below it. This means that this area here, 144 to 160, is a great support zone, right? There's a ton of volume support. This 195 to 210 area is not a great support zone yet, right? It needs more trading pair. It needs more trading time to become that volume support. So when we start going back up to like 225, 230 and all that, we have this golden pocket as something that we can come down and touch and bounce off of it and move up. I still think that $300 it should be a bottom for EGLD. That should be around what it's valued at the least. So I still think that this is severely undervalued, which is great because I've still been accumulating, and I can't believe that I'm able to do that every week. It's unbelievable. So the fact that I'm able to accumulate at these prices, it's pretty incredible. And I think a lot of people are going to start realizing that as they see what's happening with the partners that Elron's working with. Anyway, we're at 14 minutes, so we broke the 10-minute rule. Not by too long, though. This was good. I hope you enjoyed it. We're going to wrap it up there. If you have any questions and stuff, throw them in the comments. Let me know if you like the shorter form video better, and I'm going to try to do better next time. I'm going to set a timer on my watch or something. We'll figure it out. All right, you guys. I really appreciate you. Thank you for joining me. Make sure you follow me on Twitter. Check the link or check the description for all my links. You'll see them there. And like, subscribe, the usual stuff. I'll catch you next time. Peace out.